All right, Taking Profit gang. So today we're gonna be going over the RSI Relative Strength Index, the indicator that everybody loves to hate but still uses. We're gonna look at how to use it, how not to use it, and most importantly, how to make money with it. Let's get into the charts.
A few moments later.
But before we do that, you know what time it is, you know what time it was, you know what time it always been. Like and subscribe or else
you deserve to be broke.
All right, so first things first, let's get a quick definition or overview of what the RSI actually is. What is the Relative Strength Index? This is according to Investopedia. The Relative Strength Index is a momentum indicator used in technical analysis. RSI measures the speed and magnitude of a security's recent price changes to evaluate overvalued and undervalued conditions in the price of that security. All right, let's break it down in English. That means it tells you when the price of something is too high or too low. In other words,
your price is way too high, you need to cut it.
Or
I got it for the Lolo.
The RSI displays as an oscillator a line graph on a scale of 0 to 100. Okay, as you can see, this is a line graph and it's a scale from 0 to 100, though you can't see it fully here. Let me enlarge the screen. But it goes down to 0 up to 100, although it's not very typical that you get readings of 0 or 100 on the RSI. The RSI was displayed as an oscillator. The RSI can do more than point to overbought and oversold securities. It can also indicate securities that may be primed for trend reversal or a corrective pullback in price. It can signal when to buy and sell. Traditionally, an RSI reading of 70 or above indicates an overbought situation. A reading of 30 or below indicates an oversold condition. All right, so that's a brief definition of it. So without being too long-winded and getting straight to the point, let me explain to you how I actually use the RSI and how I feel like it's best used in trading. So as you can see, we're on the 12-hour. Let's go to a daily on the Bitcoin chart. So this is a daily. As you can see, there have been times where the RSI has went below a 30 reading here. And typically it has bounced, but not every time. As you can see right here, we went below a 30 and continued to dump. So, and also there's times, let me find some times where it went above a 70 and continued to pump. So there have been times, as you can see right here, where it went above a 70 reading, and had you sold right here, you would not have caught a whole $10,000 move. So, well, actually more like, yeah, I'd say 10,000 from about, it went above 70, let's say, right here at about 57,000 and continued on to 68,000. So obviously that we don't want to use it in that way. So what is it used for? Straight to the point, I use it mostly for divergences, or what I like to call imbalance of conviction. What is an RSI divergence? Let's be short and sweet about this. It's exactly what it sounds like. It's when the price and the oscillator, the RSI in this instant, are diverging. Here's an example. The price made a higher high, yet the RSI made a lower high. This is an RSI divergence. In this case, a regular bearish divergence. There are other kind of divergences called hidden divergences, which we won't go into in this video. They're kind of a semi-advanced topic, so we won't talk about it here. But just know that that's another kind of divergence. Here's another bearish divergence. The price made a higher high, and the RSI made a lower high. And as you can see, price went down after that. Why is this? Is it magic? No, it's not magic. Like I said, I like to refer to this as imbalance of conviction. It's basically saying the price is going higher, but the conviction or the emotion, the greed, the momentum behind this rising price, there's an imbalance and it's not showing up in this oscillator. So as this price is continuing to go higher here, there's less conviction behind it. There's an imbalance. And when you see this, it's a good sign that, hey, maybe we might be reversing soon. Maybe this thing is starting to be a little bit ready to pull back at the very least. Divergences tend to be more powerful when you're at these high readings, like in combination with the fact that it's oversold here. So you can get a bearish divergence, but it might not be as powerful if you're not in oversold or overbought conditions. Let's find a bullish divergence here on the chart somewhere. Here's one right here, actually. This is last summer when Bitcoin was pretty bearish. And this is a really wide divergence with multiple drives. I don't want to go into how drives work too deep, but let's just look at this. Here's one drive of bullish divergence. As you can see, we have a lower low on the RSI, on price, but on the RSI, we have a higher low. And price proceeded to pump after that. Now, if you want to look at this and understand what I mean by multiple drives, here's another, it goes even longer. So there's two drives of it. The first drive was right here, where we had this lower low and we had a higher low here. And we got like a little bounce, but the entire divergence looks like this. From here to here. We don't include wicks in these. The RSI typically works on closing prices. So these wicks don't really matter all that much. But as you can see, we have lower lows and higher lows on the RSI. This is a pretty nice bullish divergence here. So that's one of the main ways the RSI is used. Another way that I have seen the RSI used, I don't typically use it this way myself, but I know a lot of people who do, and with great success. Let's not take anything away from that. I don't want to diminish the fact that there's more than one way to do things, even though those might not be the way I use it. But some people use it to draw trend line breakouts. I'm not a trend line trader myself, but as you can see, we had this huge bear trend here. And as you can see, we break out of it here, which is a nice signal to long this. But if you want to combine it with the RSI divergence, here's a cool thing. You have this breakout of the trend, but you also have lower lows from here to here. And divergences do work through price action. They don't have to be typically directly connected. So you see we have here a pivot and another pivot here. Here, let me cut on an indicator that'll show you this better. So you have a lower low here and a higher low here. These are two pivots. And as you can see on the RSI, we do have a bullish divergence with these pivots. From here to here. And we get a nice bounce here for about, actually about a $7,000 trade right there. So, sorry to get off topic here, but I had to point out that divergence. But also, like I said, people would, instead of drawing this trend on the actual price action, they would draw it here on the RSI. And you could set an alert for when the RSI bounces, which is it's a good little setup here. As you can see, the RSI bounces from oversold, then it breaks out of this bearish trend, and you could use this as a signal, especially in confluence with this bullish divergence. So that's a pretty basic explanation for how divergences work. I think I'll go more in depth with this in a later video. If you need some questions answered about how this works, feel free to ask in the comment section and I'll get back to you as soon as possible. Let's just look at a few more to make sure you guys get this. See if we can spot any more. Over time, as you get used to using these, you will be able to spot them better. There are indicators that do a lot of the work for you. But this is not a thing that's specific to the relative strength index. It works typically with any oscillator. The thing that's cool about the RSI in comparison with other oscillators, take the money flow index, for example. I really love the MFI. I like the on-balance volume. I like a lot of those indicators, but they use volume data in their calculations. And for some securities, maybe in Forex land, some indexes, I think a few securities, there are quite a few out there that don't have volume data. And so they just wouldn't work. It just won't work at all with those securities. The RSI doesn't include volume data. So it will actually work with any security that you can throw at it, which is a pretty cool thing. Like, you might not have the ability to use volume, so it works with anything. That's a cool thing about the RSI. Here's a bullish divergence, actually, that just happened on Bitcoin. And hence we got this nice little bounce, as you can see. And like I said, let's look at the pivots of this. So we have a lower low here. Lower low on the RSI right here where this pivot is at. This is the last low, and then we have a low here. Sorry, not a lower low. It was previously, but concerning this divergence, we have a low here, and then we have a lower low here. You see? Lower low. But on the RSI, so we have this lower low on price. From here to here. But we have a higher high on the RSI. And like I said, yes, it does. These divergences do work. They can cut through price action. I know some people don't believe that, but That's typically how it works. It really does work that way. But you want to look at the pivots. And I also wouldn't use divergences that are too wide. You don't want to go too far back in time when finding divergences. But the most powerful ones are the ones that you find in situations where the RSI is showing overbought or oversold conditions. So, yeah, that's pretty much it. I hope you guys enjoyed this video. Get back to me in the comments. All right, see you soon. All right, so there you have it, the best video on trading with the RSI that you gonna find on the internet, on YouTube, on the web, anywhere in the world. Nah, for real though, man, it's your boy G5, I'm out. Follow me on Twitter, Instagram, and wherever else you can find me at. Peace.